1. Which of the following best describes the primary role of a certified insolvency and restructuring advisor, CIRA? A. To prepare tax filings for distressed companies. B. To provide financial advisory services in turnaround, restructuring, and bankruptcy situations. C. To audit the financial statements of solvent entities. D. To manage equity investments in growth companies. 2. Under Chapter 11 of the U.S. Bankruptcy Code, which of the following is typically the debtor's role? A. Debtor in possession retaining control of operations. B. Debtor must cede all operations to a trustee. C. Debtor is immediately liquidated by creditors. D. Debtor is prohibited from proposing a reorganization plan. 3. Which of the following best describes preferential transfer under the Bankruptcy Code? A. Any payment made to a secured creditor after filing. B. A transfer made to a creditor within 90 days of filing that gives them more than they would in liquidation. C. A distribution under a confirmed reorganization plan. D. A fraudulent misrepresentation in financial statements. 4. When conducting a liquidation analysis, the purpose is to A. Estimate the tax liability of the debtor. B. Evaluate the company's potential value in a forced sale scenario. C. Project the future earnings of the debtor. D. Assess the company's goodwill impairment. 5. Which of the following is true regarding the automatic stay provision in bankruptcy? A. It halts collection activities against the debtor immediately upon filing. B. It permanently forgives all outstanding debts. C. It allows secured creditors to enforce liens without court approval. D. It prevents the debtor from continuing business operations. 6. The cram-down provision in Chapter 11 allows A. Creditors to impose liquidation on the debtor. B. A court to confirm a plan over dissenting creditors if statutory requirements are met. C. Debtors to eliminate all secured claims automatically. D. Creditors to remove the debtor in possession. 7. Which type of claim has the highest priority in bankruptcy distribution? A. Secured claims. B. General unsecured claims. C. Equity holder interests. D. Subordinated debentures. 8. In restructuring, which financial statement analysis tool is most useful for evaluating liquidity? A. Cash flow statement. B. Income statement. C. Retained earnings statement. D. Market capitalization analysis. 9. DIP financing is A. Debt financing provided to a company during bankruptcy proceedings. E. Equity financing issued to new shareholders. C. Long-term bonds sold prior to bankruptcy filing. D. A government grant for insolvent entities. 10. Which of the following represents fraudulent conveyance? 10. Which of the following represents fraudulent conveyance? A. Selling assets at fair market value before bankruptcy. E. Transferring assets to insiders for less than fair consideration to avoid creditors. C. Paying employees their regular salaries. D. Purchasing new equipment through a secured loan. 11. A 363 sale in bankruptcy refers to A. The sale of debtor assets under Section 363 of the Bankruptcy Code. B. The issuance of securities under SEC Rule 363. C. A type of equity carve-out transaction. D. A sale of intellectual property under tax regulations. 12. Which of the following is the best reason for conducting a viability assessment? A. To determine whether reorganization or liquidation is more appropriate. B. To prepare a debtor's corporate tax return. C. To establish new equity compensation plans. D. To ensure compliance with GAAP accounting standards. 13. Which of the following ratios is most relevant for assessing solvency? A. Debt-to-equity ratio. B. Gross margin ratio. C. Inventory turnover ratio. D. Price-to-earnings ratio. 14. The primary purpose of the Unsecured Creditors Committee in Chapter 11 is to A. Represent the collective interests of unsecured creditors. B. Oversee the debtor's tax compliance. C. Approve the appointment of bankruptcy judges. D. Administer post-confirmation trusts. 15. Which financial model is most often used in restructuring to value distressed businesses? A. Discounted cash flow, DCF. B. Dividend discount model, DDM. C. Real options pricing model. D. Gordon growth model. 16. Which of the following describes executory contracts in bankruptcy? A. Contracts where both parties still have material obligations to perform. B. Contracts fully performed by both parties. C. Only loan agreements with secured creditors. D. Any oral agreement between debtor and creditor. 17. Which section of the Bankruptcy Code governs reorganization? A. Chapter 11. B. Chapter 7. C. Chapter 13. D. Chapter 15. 18. Which of the following defines going concern value? A. Value of the business assuming it continues operating. B. Value of the business if liquidated today. C. Value of the business based only on tangible assets. D. Value of the equity after bankruptcy. 19. In bankruptcy, which claim is considered an administrative expense? A. Professional fees incurred during the bankruptcy process. B. Shareholder dividends. C. Pre-petition general unsecured claims. D. Subordinated notes payable. 20. Which of the following is not typically a goal of restructuring? A. Restoring profitability. B. Preserving jobs and operations. C. Maximizing recovery for creditors. D. Increasing speculative equity trading. 21. Which test is often applied to determine insolvency in fraudulent transfer analysis? A. Balance sheet test. B. Price-to-earnings test. C. EBITDA margin test. D. Market multiple test. 22. Which of the following best describes substantive consolidation? A. Combining the assets and liabilities of multiple related debtors into one estate. B. Merging the operations of a debtor with its competitors. C. Consolidating financial statements for tax reporting. D. Eliminating intercompany loans through write-offs. 23. In a distressed debt exchange, creditors typically A. Swap existing debt for new securities with different terms. B. Receive cash equal to the par value of the debt. C. Are repaid immediately through liquidation. D. Convert their claims into government-backed securities. 24. Which professional is most likely to serve as a Chief Restructuring Officer, CRO? A turnaround consultant with operational and financial expertise. B. Bankruptcy court clerk. C. Tax return preparer. D. Shareholder representative. 25. A liquidation plan under Chapter 11 is A. A plan confirming the orderly sale of assets while in Chapter 11. B. A plan requiring immediate Chapter 7 conversion. C. A plan designed exclusively for secured creditors. D. A plan that avoids distribution to unsecured creditors. 26. Which type of financing is usually senior in priority? A. DIP financing. B. Subordinated unsecured loans. C. Equity injections. B. Convertible preferred stock. 27. The absolute priority rule dictates that A. Senior creditors are paid in full before junior creditors or equity holders receive distributions. B. Equity holders must be repaid before secured creditors. C. All creditors share pro rata regardless of priority. D. The court sets the repayment schedule without considering priority. 28. Which of the following is a key difference between Chapter 7 and Chapter 11 bankruptcy? A. Chapter 7 focuses on liquidation, while Chapter 11 focuses on reorganization. B. Chapter 7 is voluntary only, while Chapter 11 is involuntary only. C. Chapter 11 eliminates secured claims, while Chapter 7 does not. D. Chapter 11 is limited to individuals, while Chapter 7 is for corporations. 29. When analyzing distressed companies, the Z-score model is primarily used to A. Predict the likelihood of bankruptcy. B. Measure current tax liabilities. C. Assess goodwill impairment. D. Forecast stock market returns. 30. Which of the following best explains equitization in restructuring? A. Conversion of debt into equity. B. Issuance of new secured bonds. C. Liquidation of non-core assets. D. Purchase of stock by insider creditors. 31. Which of the following may be rejected by the debtor under Chapter 11? A. Burdensome executory contracts. B. All secured loan agreements. C. All tax obligations. D. Final judgments from court rulings. 32. A restructuring advisor would most likely recommend debt for equity swaps to A. Reduce leverage and improve balance sheet stability. B. Increase short-term tax liabilities. C. Expand the debtor's asset base. D. Maximize dividend payouts. 33. Which party confirms a Chapter 11 plan? A. Bankruptcy court. B. Shareholders. C. Unsecured creditors committee. D. The U.S. trustee exclusively.